Welcome to today's morning report with me, Rich Perry, market analyst at Antec Markets, on Thursday, the 30th of July. The European trading session, a bit cautious at the open, and markets, just generally speaking, have just been sort of a little bit dollar-driven in the last 12 hours or so. Well, certainly in the wake of the FOMC meeting. That FOMC meeting that we've seen has been, it didn't really do a great deal, really. It didn't really change much to what the market already knew. It wasn't anticipated to have a rate cut in the meeting anyway, but the FOMC statement was pretty cautious, really. But it did talk about some further improvement in the labour market, and also just talked about commodity prices being a little bit transitory at the moment. So the inference from that is this very slight hawkish tilt in the statement, but nothing really that points towards a specific rate hike either in September or December. So there's a very slight element of dollar strength that has come out of it. Certainly, just looking at the dollar index, for example, has jumped on the back of this coming higher again, and also continuing to move higher today, but only in a marginal sense, nothing too significant there. In terms of equity markets, pretty much supportive, really, but I suppose there's a batch of earnings going on in the big belly of earnings season at the moment, with some key companies reporting. Certainly in the European session, we've had earnings from the likes of Siemens and AstraZeneca, and markets are fairly sort of on the just positive side of cautious, really, rather than pushing strongly higher. I mean, Asian markets overnight were strong, with the Nikkei up 1.1%, and the volatility in China just still in the market, but nothing like it was back on Monday when it fell 8%. So the stocks in Asia were fairly settled, and that sort of drifted through into the European session today. We've got a big numbers ahead of us today, which I think the markets are quickly going to now focus on. We've got the Q2 GDP for the US. But just before that, we've got German inflation, which is basically reported throughout the morning with the regions, and then you get the cumulative number at 1 o'clock UK time, and that's expected to be in line with what it was last month at 0.3%. So no major shakes there. But then we look at the big number of the day, which is the advanced GDP for Q2 in the States. Now, this is the chart of advanced GDP, which annoyingly is how Reuters likes to show it. It's not the final data. The final reading was negative 0.2. So just bear that in mind. But certainly the advanced GDP is expected to come out at 2.6% annualized. Remember, that's an annualized number. So that is at 130. So that would be a decent rebound, certainly, from last quarter. And then also at 130, we've got the weekly jobless claims. Now, weekly jobless claims last week fell to 255,000, which was a massive multi-year low on that weekly jobless number. It's expected just to push higher again by just about 15,000, actually 270,000, but it would remain a decently strong number, and that sort of backs up the Fed's assertion that the labour market continues to improve. So that's what we've got to look out for today. Now, in terms of my chart of the day, I'm looking at the euro yen, really, because we had the euro yen breaking back below the 36.95. Now I'll just zoom out here. 36.95 was sort of a big neckline breakout that we had in June, and then just throughout June you had the debate, the Greek crisis, and then euro yen, or the euro, spiked lower on that, and certainly the safe haven yen trade came through. But that's gradually now improving once again. You certainly are seeing a turnaround in this move. The higher low that we've seen on this euro yen chart, if it comes up, 34.28, came above that key low at 33.26. So there is a sequence building of high lows and pressure on that 36.95 resistance again. That neckline, that old neckline that was a bullish breakout in the beginning of June. So it would suggest that the market is building, I think, for a bullish breakout again, or certainly putting pressure on this. We haven't seen a close above it. We've seen a couple of intraday moves above it, but no closing break. And we saw a bit of a slide yesterday, but I think ultimately that's going to not do a great deal of damage to the chart, even though we have got on the intraday chart, I'll show you here, this uptrend that has been broken by that slide. I just think that this is a move back into support. I've got the line around 36 figure here, 136, and also if you zoom in again, you see this support coming in around 35.50 as well. So between 35.50 and 36 figure, you can see that that's a decent basis of support, I think, on this chart. So anything into that zone, I think, is going to find support and then push higher. Already it looks to be trying to build support around 36 figure and turn these momentum indicators around, but I think this is possibly going to be a buying opportunity actually for a test of that 36.95 key resistance again, and I think ultimately you could well see the euro gathering strength and pushing higher above that level. So that's what I'm looking out for. In terms of momentum indicators, the RSI and stochastics have been improving, although they've just tailed off with that little correction that we saw yesterday. Stochastics rolling over, but generally speaking, I think the stochastics and RSI back up this sort of sequence of higher lows that I think is now building on this chart, and I think it's going to be ultimately giving us another chance to buy. So that's my outlook on Euro Yen today, so I will speak to you later. Thank you.